Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is May 13th, 2016. It is 9:03 a.m. Eastern Time. For those of you that are here for the first time, welcome. And for those of you that are back, welcome back. Before we continue, let us go to the disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation or website is neither a solicitation to buy or sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. So again, I want to welcome you here. For those of you that are here for the first time, and for those, welcome, and for those of you that are back, welcome back. Let's take a look at the calendar real briefly. It's always interesting to see what lies they have. Numbers. Okay, Europe. German preliminary GDP for Germans, quarter-on-quarter, came out better than expected. Final CPI for Germans came out less than expected. Non-farm payrolls quarter-on-quarter for the euro came out as expected, as forecasted. Italian GDP as expected. China money supply less than expected. New loans less than expected in China. A lot less. Woo! Half of what it was last month. Construction output for the UK less than expected. Flash GDP for the euro quarter-on-quarter less than expected. I don't care what Holden said or Whale. U.S. right now, core retail sales came out better than expected. Producer price index month-on-month came out less than expected. Retail sales came out better than expected. Incredible. Core producer price index month-on-month came out as expected, better than last month. And right now we're going to be waiting for consumer sentiment, which always is a great mover and a shaker. Business inventories month-on-month and inflation expectations. So we should expect this within the next 55 minutes. That'll be the end of the news. Wonderful. At least now we know we have some news coming up. Let's take a look at the game and see what we have in the game today. So I'm going to go briefly over the indicators real quickly before we get down and boogie. So I'm looking at a 7-minute, and I really prefer to look at a 10-minute, 15-minute, forgive me. So we'll go to a 15-minute real quickly, and then I'll break it down. So how many of you got the video for the first time, and how many of you actually saw the whole thing, and did you understand it? And if you understood it, then maybe it's something that you think that you want to learn about. Simple yes will do. All right, so let's go over the indicators. So our pride and joy is this indicator right here. Let me get the pointer. The pointer makes life easier. See these gold dots right here? This is our pride and joy. This was our main algorithm that we created. They are called power dots. Why? They're very powerful. They introduce three things: that there is volume, momentum, and liquidity coming into the market, which equals trade. Whenever you see the first 2 or 3 form, immediately know that there is a trade setting up. And you will have between a 20 and 30 or 45-minute window before the trade actually occurs. Now, this is the trend stop. And as you can see, it's not like a moving average, because it's not. It's an ATR level that we use. It serves specifically just to serve as some support or resistance levels and to identify that they're not going to break a trend, but it does not trigger our entry. That's not what it's meant for. The trend dots. The trend dots basically identify more or less how the candles are reacting. As you can see here, once they begin their trend, that's pretty much it. Again, we do not base our decision to go long or short based on the trend dots. They're more or less to identify whether the banks are going to continue to stay in the trade, if they're going to use them as support or resistance levels once they break them. But that's it. But they do not trigger our entry. pivots. These little dots right here, these magenta peak dots, these are very important. They map out and outline the next levels that the trade is going to head to. Very significant, very important. Why? Because, for instance, here in this trade, see how this came down? This candle is a high frequency candle. Why is there a lot? Because there's a lot of high frequency volume in it. They threw the kitchen sink at it. And so when we look at volume, you will see all the volume in here was just above and beyond the norm. Now, what do these dashes mean? This is the next indicator. This is another pride and joy of ours. This is called the volume price identifier. And what it does is that it identifies the price level in each candle that the sellers prefer to offer or sell at, and that the buyers prefer to bid and buy at. So in this candle, which is a long candle, we have what is called an imbalance between the buyers and sellers. Even though price action is really what dictated where the candle is going to settle, it is the imbalance of where they prefer to buy and prefer to sell. See, the distance between them is horrendous, horrible. I mean, this is saying that the sellers are willing to sell higher, but the buyers are not willing to buy higher. And so, of course, the next situation was go short, short, short it, don't go long. And again, here it's inverted. You have the buyers willing to buy here, the sellers willing to sell at the bottom. And so again, we have another imbalance. These are two imbalances of the worst kind. And very, it's a detail that most people don't really see or understand. See, like this candle here. I love this candle. This is a pattern candle. This one and this one, we kill for this candle. Why? Because it tells us so much information. So here, for instance, see how this candle is currently using in the Dow the trend dots to basically bounce off of, and the trend stop is moving to the upside. Why in the world would I seriously consider going short right now when this is planning to go up? And so when I see something like this, even though I see power dots and I see that they are using, here for instance, they're using the 50 moving average. Now, why am I using these moving averages? Well, I'll make it very simple for you. These moving averages are being used as a mean. So do not use these moving averages as a moving cross. This is a 200 EMA. This is a 100 EMA, and this is a 50 EMA. So these two candles that you see here, or these three moving averages, are used as a mean. Why? Because they're late. That's their whole formula is based on a little paper that was written by a number of PhDs, which shall remain nameless, and their theory is based on that strategy, except they made modifications which were just beautiful. When I read these things, I was like, oh, God, Lord have mercy. He just gave me the secret. And so now, of course, our trades are extravagantly awesome because we understand the institutional mindset. So we don't fear getting into a trade because we understand what the trade is all about. So I'm going to close this little trade because I don't like it right now. And we're going to go look for another one real quickly. I'm willing to scratch real quickly. So let's take a look at another indicator that we created before we bring in the volume indicator. This one is the FX radar. And this one tells you a lot. It tells you a big story. And what does it tell you? It tells you how each line here signifies a currency. The white, the Swiss, the blue, the New Zealand, the green, the euro, the red, the Australian, the orange, the British pound, the magenta or purple, the yen, this one, the turquoise, the US dollar, the yellow, the Canadian. So what does it tell you? It tells you how they are trading within the portfolio of 8, whether one has been weakened against the portfolio or whether one has been strengthened against the portfolio. This weakness cannot be sustained, and this strength cannot be sustained for too long. Eventually, they must be brought back into balance. Now, this is a lagging indicator, and I don't use it as a leading indicator. Why? Because it was never meant to be a leading indicator. So, why do I say that? Very simple. Because in reality, what it's meant to do is just basically tell you what they have already done. And so then at this point, it's up to you to go to the charts and see what is there to do next. Oh my God. What am I going to do? How exciting is this trade going to be? And so if you're looking at currency, this is a great thing. If you're looking at the Dow, this is a great thing too. Why? Because the Dow and the yen have been strongly correlated. Wherever the Dow goes, the yen goes. Wherever the yen goes, the Dow goes. So it gives you good insight. Here, for instance, it tells us that the yen is being weakened. Okay, so that means the US yen is going long because the US dollar is gaining strength. Here it's telling you that it's already gained strength against the Canadian, the Swiss, the euro, maybe possibly not the British pound. So now we have insight as to what currency pairs we should go look at. And so then we bring here the market analyzer where we have all our instruments, all the pairs that we want to see, all the futures. And so now we want to know what is in play. So we've programmed the market analyzer to notify us on a 10-minute. You can do it on a 30, a 50, a 60, a 180, I don't care. To notify you which pairs have power dots. And so now it allows you to basically scan, go to those charts, determine which trade is actually suitable. But now you can see, okay, you can compare this to this and say, all right, which one actually looks really, really good? So now you start to break it down to only 4 or 5 pairs. And so now when we do that, for instance here, maybe right now I'm interested in seeing the US Swiss. Okay, let's take a look at the Swissy. All you do is click there and boom, it takes you to the pair. Very systematic, very logistical, very easy to comprehend, and very easy to program. So now we are at the US Swissy. Let us move this over. Well, it said that the US dollar was gaining strength against the Swiss franc. Well, it did. It had. What happened here? Well, of course, it's reversed, but now you see that there's an imbalance. The sellers are not willing to sell at a lower price. The buyers are willing to buy at a lower price, and they're bouncing off the trend dots. So the question is, do I like this trade? So what do? I start looking at the smaller minutes. I go to a 12-minute. I go to a 10-minute. I go to a 7-minute. And I want to see if I can find power dots that would tell me I'm in play. Now, the market analyzer never told me that there were power dots. Remember that. So here, for instance, there are power dots. They're trading right off of this level, but not here. It's okay. We will still use this information to our advantage because this is telling us that they are using this level. See, the power dot levels in the higher time frames and in lower time frames serve as support and resistance levels and sometimes as mid-range levels. In this case, they're using this one as a support level right now. So long as they don't break it, it is a support level. What happened? They came, they hit it, boom. Now, remember, they said US dollar gaining strength against the Swiss. It did at the open at 5:30. The news came out, pop goes the weasel. So it went from 97.15 all the way to 97.50. It's not a bad trade. Very aggressive trade, high frequency at its best. They basically just slapped someone and it hurt. So now we have to determine, is this a trade that we are looking to go into? Now, normally I would be all over this, except that because they have already hit and they formed a pivot, this signature here is not something that I'm happy about, so I need to continue to go down. So I'll go look at a 10-minute. 10-minute will tell me, is this going to continue to go up, or are they actually setting up to go down? And I'm looking for a specific pattern in the candles, which is not here. Now here, for instance, I'm looking for a pattern that did not come out, but it did come out here earlier. See, this pattern of 3 is beautiful. My God, if you get this pattern, this is like telling you, what are you waiting for? My God, man, just take the money. Go long. And then, of course, they did. Then they came down and they basically used the moving averages as a mean. We call this mean reversion. Now, the papers that are out there, which were written by these PhDs, are very complicated to understand. I'm telling you, you got to be a little bit psychotic to really wrap your head around it. And I have that type of mind. So it's funny because my son was telling me, Dad, do you really understand what they're saying? And I go, son, I'm an economist. And I studied politics, and so I understand their math, their way of thinking, and the way that they are presenting their papers. So yes, I understand it. This is a chess game. So what we've designed is a toolkit that allows you to play chess with them and win. Now, you're probably saying, well, this looks a little complicated. It's not. And hopefully if you saw that video, you saw why. The explanation was very, very in-depth, very simple, very consistent, very logistical, very easy to comprehend as we're identifying trades. Same thing here. So here they've traded away from the mean. Does it mean that they're going to come back to it? That's a good question. That's the question of 1,000 words, which we don't have an answer to yet on the 15 or a 12. We do know that they're using this as a support level. That's all we know. We do know that the trend stop is saying long. We do know that the trend dots are saying long. We do know that the moving averages are staying still, balanced as a mean. So now, the 7-minute. Life is very simple. Life is not meant to be complicated. Life is meant to be easy. They complicate it. Now, here, for instance, I have a concern. The 7-minute is telling me something that I was not aware of. Number one, there's an imbalance when they went. The buyers wanted to continue to buy. The sellers did not. Here, there's an imbalance. The buyers are saying, I don't want to buy anymore any higher. The sellers say, I want to sell to you at a higher rate. Here, of course, they came down slightly. They held. And then here they went up. But both buyers and sellers agreed not to buy or sell at a higher price. But some bank took it up higher anyway. But most of them agreed not to. And then here, of course, we have an imbalance, which basically said buyers wish to continue to buy, sellers said no. And then they go boom, down. And of course, when they came down, they did it twice. So they broke through these trend dots, which was wonderful. So now we have something which is inconsistent with the trade that does not allow us to actually say jump. What is that inconsistency? Okay, so here we have them breaking the trend dots, and now we have them actually going back to retest them. Now we know that on the 12-minute there were power dots here. Okay, so why am I not going short? Why am I not going long? Because at any moment they can come back, retest the trend dots, and then flip to come down. We call that a flipper because he's taking a dolphin nosedive. But so right now, we don't have a trade because we don't have enough information. And you know what that is? That is a trade in itself, when you know not to take one. So we know that the US Swissy is not our friend right now. And because that is the case, we have to eliminate it from our potential trades. So now we can look and see, okay, what else is in play? So let's go take a look and see if there is something else that will catch our attention. Is there something else that will attract us? So here, for instance, nothing in the futures, the Dow, S&P, Nasdaq, the Russell, crude, the DAX, gold, yen, no, US CAD, no, Euro USD, no. We have Euro Aussie. So let's see, Euro Aussie, Euro down, Aussie up. Ooh, okay, that may be a good one. Let's take a look at the Euro Aussie. It's in play. We have power dots. That just might do the trick. And again, we haven't even looked at volume. So, for those of you that think this is over, oh no, this ain't over. This is just beginning. Again, it's very systematic, very simple. We will look at features very, very closely, I promise you, and you will see that we will find trades again. But everything in due time. Never, ever get anxious about jumping into a trade. Why do I say that? Because when people do that, they lose. Put your trigger finger away and let's wait for the right one. I promise that the right trade will come, and when it does, it will be on our terms, not on theirs. What we're trying to teach you here at Phoenix Trading Strategies is that you can trade. You can win. We trade to win. But we look for specific setups to not be victims of their game. So they have to trade on our terms. Okay, so we saw the euro going down, the Aussie going up. So that means that this is coming down. However, I don't like this trade right now. I'm not comfortable with it. Why? Because this is telling me that they're going to continue to go long, and they're using the trend dots right here as a support level, and they're trading right off of the mean. This is a 7-minute. I don't have power dots here, but I have power dots up here. Now see this candle right here? This said go long. Jump, don't even question it. Throw the kitchen sink at it. Literally, borrow a kitchen sink if you don't have one, and go long. Well, now they're setting up again. And so they're consolidating. See, after a move, what they do, tricky, unethical bastards. Excuse me, I didn't say that. What they do is that once they make a move, then they pull liquidity and they stop. Why do they stop? Because they know that if they stop, then no one's the wiser. So they pull liquidity, volume is still in play. Let's look at the 60 while we do that. But they're not going to move the market as much. They're going to flatline. Why? Because they don't want you to continue in that trade. See, their algorithms are now programmed to generate fear. Good morning, John. So nice to see you, my good man. And so they work off of your fear, and they know when to trigger it. They know that if you get into a trade and you, by some lucky chance, actually got in at the right time and made a few pips, then they're interested in taking you out. So they know what your trigger is to get out. See here, for instance, see this pattern right here? Even though it's a bullish candle, okay, it had negative volume. I'm going to show you now the volume indicator. This is a masterpiece. Picasso couldn't paint one this way. He only wished he had. This is our baby. The Mona Lisa doesn't even come close to this masterpiece. Because this one tells you a story that you never thought you were going to hear. Have some coffee. Believe me, you need to wake up. God, I can't wait to have a robot that would just give me a massage. So give it a minute. The volume indicator takes a little bit of data, actually quite a bit of data, quite a bit of memory. But at the end, it's a real beauty. And don't think that this is slow. This is slow because I've got GoToWebinar. This thing moves quick. Okay, so what do we have here? Information. So here, for instance, remember we were looking at this. What did we see here? And why is this important? Now, this candle, and we're going to bring out the volume, because in its current state, it's telling us go long. This current candle has 33 million on the buy, 19 million on the sell. Difference of 15, now 34 million on the buy, 36 million, 22 million on the sell, 37 million, 38 million on the buy, 23, difference of 17. So you have more bullish volume in this one. This one had everything. My God, man, they threw the kitchen sink at this thing. Look at that. 1.8 billion on the buy, 1.788 billion on the sell, a difference of 17 million. So it was bullish. You have a bearish candle with bullish volume. Can that actually even make sense? Actually, it does. See, they've figured out a way to hide the volume in the candles, which you can't see, but we have decoded. This is a price in itself. If you don't have this indicator, you're lost. Now, this candle here, look at how much this little candle here had. 806 million on the buy, 753 million on sell, difference of 53 million. It's still bullish. This one had 942 million on the buy, 897 million on sell, difference of 45 million. Now, why is this important? Because if there was a reversal, these candles would have announced, but they would have settled with a negative outcome, not positive. Anything that settles above the gray line is bullish volume. Anything that settles below is negative volume. So where is this trade going? Up, not down. Don't confuse that. So now we can go down to the 15-minute and work our way. Shit, I'm going to have to remove the volume indicator because otherwise it's going to take forever. And Phoenix volume, remove. Let's go. Try to make it exciting for you. Give it a minute, we're almost there. There it is. So now we know that this one has more intent to go long. So let's look for a long on it. See, I love information, but I love the right information. If I don't have the right information, I'm not interested. Why? Because anything else doesn't matter. It does not matter. Truth matters. You know, there's a saying, the truth will set you free. That's no lie. That same thing applies in trading. Trading futures, trading forex. We apply the same principles for one thing, to discover the truth. Now, that indicator said go long. We were looking at it. This candle said go long. I like long. Long makes sense to me. Why am I waiting? Because I believe that this may retest. And if it retests, then I'll go long. But at least now I'm aware of what potentially they can do. That is all that matters, is understanding what the potential could be. And if you understand what the potential could be, then you don't fall victim to it. But again, what's wrong with this picture? They used the trend stop here, as you can see, and came down. Now they're, attempting to go long, but it's not really there yet. They've already made quite a big move, so for all I know, they can come back and consolidate. See, when they went long here, what did they do? Consolidated. You didn't know which was the wiser, and then they went short on you. And now, of course, they're right back here, but still, they're undecided. If I would have gotten in here when there were power dots here, this would have been a preferred trade. I don't like this trade. This isn't a trade that I would jump at. Why? Because it's messy. It's not consistent with my terms. So it has to be on my terms. Now, I know that they're trading around the mean right now. Okay, fine. Go for it. Trade around the mean. Do your duty, but when you give me my trade, then that's when I'm going to take you. And so again, we fall into, do we scalp? And if we do scalp, are we doing it on our terms, not theirs? See, they know that people are getting antsy about getting into a trade. They know that. I'm not. It's on my terms, and my terms only. And if I make a mistake, then I own up to that mistake. And that's it. That is as far as I go. Now remember, we saw that the euro was going to go down against the Aussie dollar. So the Aussie dollar will gain strength. That is what was stated. Now here, for instance, they came down, they came up, held, and now they're coming down. So now if I understand that that may be the trade, then maybe I will feel comfortable going short at this point. Why? Because it looks like they're going to, since they traded away from the mean here, look, see, looky here, see how they went away from the mean, they've come right back to it, and they've traded on my terms. So now, here they said short, okay, here they said short, here they said short, and so here, and so even though this was a news, release, and they did do such a good job of displaying the news and whacking everyone out, well, if the Aussie is gaining strength and the euro is weakening, then this will go short. And so I have to come to terms with my decision. What will I risk? If my entry is here at 155.85, then maybe I'm only comfortable risking 15 pips. And that's my stop loss. That's it. That's all I'm willing to risk. I'm not willing to risk more. But if I saw this based on price action to go long without analyzing everything that has happened beforehand, how they used a trend stop as a resistance level to establish a short trade, then I would have gone long here and I would be getting my head kicked in. So we don't like getting our head kicks in, do we? We like to win when we trade. It has to be on our terms. So for those of you that are here for the first time, what I'm teaching you and what I'm displaying and showing to you is so outside the box that you've never heard of it before. Well, that's okay, because now you know something that you didn't know. You know that there is a different way of looking at it, and this is the true institutional mindset. This is how they've programmed the trade. See? So, was this indicator indicating to me, take the trade? No, it was not, but it was telling me, look for it. Look for a short, look for the setup. So I looked and I saw, oh, wait a minute, these guys are a little bit out of their stinking minds. They're tricking people. They want to chop people to death. So let's see how they're going to chop before we chop their heads off. Are there any questions? Silence of the lambs. Don't be silent. It's okay. There is no wrong question here. And so now basically we wait. We wait to see the trade, to see if the trade unfolds. We are basically just, we're in the driver's seat. We're on their driver's seat. They hate it when we're on their driver's seat. Do you know why? Because they can't control the trade. That's how despicable they are. Sometimes you only need 1 to 2 good trades in the morning, and you can say, thank you. And they say, no! And they scream no. Why do they scream no? Because they don't want you to win. So what we teach you here is that you can trade, you can win on your terms by learning how their super robotic algorithms are programmed to manage risk and execute their trading strategy, because we have kind of reversed their trading strategy. We know their game, and so we're going to suck it to them every time. So you see, in this one, everyone that talks about price action is saying going long. Oh, is that right? And they broke the moving averages. Let's go, guys. Go, go, go. Man, every time I hear someone say that, I say, wow, who have you been, listening to? Because they've either gotten really lucky or they've gotten their head kicked in, and they don't show you this on the live edge of the market. I like to show people on the live edge of the market. This is where it matters the most. Results are the ones that count. Nothing else matters. That's it. Now, if I can identify a trade like this in, such a small amount of time, and now I can go actually to a I like looking at the 10-minute, and I feel very comfortable when I'm in a trade to be in the 10-minute. And so we're going to go to the 10-minute, and I'm going to add volume to it, and you're going to see something. So you sure you don't have any questions? Really? You don't? I'm shocked. I'm shocked that you have no questions. I would have expected you to jump and say, whoa, why did you do such a thing? What's the matter with you? Are you insane? Well, now we know that they're trading off of the moving averages. But we were, again, in the 10-minute we have power dots that said short. In the 15-minute we had a trend stop. What happened here? They came up, never challenged the trend stop. It was said down, down, down. And so we're down, and we're going to stay down. Now we're going to add the nuclear device. We're going to add the volume. So I'm going to give it a minute because it's going to take about a minute. And we're going to see what the volume has to say. Yes, we know silence, 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 silence. I know, John. Everyone is silent because this is new to them. They're not accustomed to seeing this. They're not accustomed to hearing it. And so we understand that, it's a little shocking. Silence is golden. Well, in this case it is. Come on, 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 come on. It's the volume indicator, guys. It's, and go to webinar. I mean, okay. Now we're back. Now let's look at volume. Now, this is going to be really tricky because, see this candle, bearish, bearish volume. This was bullish. So we have two things in common here, okay? We have price action saying down. We have volume, divergence saying down. They're both in line. We love this trade. This is a trade that we live for. We live for this trade. We don't die for this trade. We live for this trade. They die for this trade because they give up so much. We got in at 155.65. It's trading at 155.49. 4 pips away from a 20 pip trade. Not bad. 20 pips, I like 20 to 30 pip trades. I love 20 to 30 pip trades. And when I can find a 30 to 50 or 80 pip trade, whoo, I'm on fire. I'm a phoenix. I'm flying to the heavens. You see, that's the reason why I chose this logo, because I wanted people to see that you can fly. You can burn through the lie of the market, and you can fly. You'll be so untouchable that they won't even see you coming. I mean, this is a type of fire that puts you on nuclear, where you just shine, and they say, "What? Who is this guy?" That's what I want you to feel. I want you to feel that emotion. I want you to feel that satisfaction that you can win. You can beat them at this game. This is a chess game, ladies and gentlemen. And if you've never learned to play chess, you don't have to. Because bottom line is, here we've made 15 pips. I don't really need to do much more in this trade because it may not give me any more. Knowing the fact that they're, waiting for news, at this point, if I don't see that it's going to continue and, I don't like this setup right here, when I see a candle do this, if I see that this one is the body is going to close above the 2 points of control, I don't like it. And so here I have 10 minutes, but in this case, I have 8 minutes. So I really need to see this candle move. And if it doesn't move in my favor, then I have no more business staying in it. And bottom line is that I've already beaten them. So if it doesn't play any further, that's okay. I'll walk out and I'll go look for something else that will. But I won't leave what I've already taken on the table away from them. That's it. You know, you have to let a trade evolve. If it doesn't evolve, see, what was the motive of this trade? The minute this came down, when we were in it, this candle had to continue to come down. Why? Because they had broken through the trend dots, but it chose not to. They decided to come back up. And so that means that they're simply setting up for news. Well, if I'm already in it, why am I going to give what they already have given to me or what I've already taken? So now we see that the dollar is getting stronger against all of them. It's being taken out of balance completely. Maybe now the US Swissy is something that would actually make sense, where it didn't make sense before, because it didn't. And we saw that it was going to go up. It's no lie. So again, we trade on our terms, because if it's on their terms, we lose. And believe me, per session you will find at least 4 trades. See, remember we were looking at it and we said it didn't look clean? And look at that, they continued. They continued. Now, we're late. If we're late, we're late, and that's it. You cannot be early in a trade that's already began. So you cannot say, well, this trade looks good, price action says go long. You don't know if they're going to, reverse and slap you. So I'm not willing to wait for that, for them to give me that opportunity. I want to trade on my terms. And if they're not giving me my terms, then I don't have anything to look at. So that means that I've got to wait. And so that means I've got to go search. So let me remove the volume indicator and go search, because I want to trade on my terms, not theirs. Don't forget that. If you trade on your terms, you win. And believe me, it is not hard to beat them at their own game. Their algorithms and their robots are programmed to basically do one thing, protect their interests, but more importantly is that they're programmed to move in ways that would simply just confuse you. Well, if you don't understand the rules of conduct, the protocols that they must follow to trade, you're going to get confused, you're going to get beaten, you're going to get served, and you're going to say, why? Oh, why? And see, that's the problem. A lot of traders blame God. Don't blame God for your mistakes. Blame yourself. It's a lack of information. And truly, it isn't your fault. I want to be honest with you. You've just never had all the information shared with you. See here, for instance, I love this trade. At the, right before they went up, they came down, they did it again. This said go long. We missed it. Oh, well. They went from 17,625 all the way to 17,687. That's a beautiful trade, but we're late. We missed it. And it's okay. If I miss a trade, I'm not going to cry about it. I'm not going to say, oh my God, I missed. No, I'm going to say, no worries. I will wait for you. You will give me what I want eventually. And when you do, I'm going to slap you silly. I'm going to beat you like you've never been beaten before. Question. We're going to have to work together on that, Richard. I'll get you back on track. You're doing... Send me an email, and then we will talk. So now, what is happening here? They're trading against the mean, away from it. Now, there are no power dots here, but they're doing something that I like. Point of control is at the top. The body is closing away from it. So what is important about this? We need the volume indicator here, because this is going to tell us if this trade is over. Now, it's going to take a minute. Don't cry about it. Believe me that when you see what I'm about to show you, if it shows us what we need, it is the trade of the morning. Someone will cry. Now, see how this one went all the way up, and this one is settling negative with little volume? Now, I don't like the way that the point of control has changed, because it was up here, if you recall, and now it's down here. It's negative. But Let's look at the volume. Let's look at that bad boy. Let's see. So here we have 166 on the buy, 213, 215 on the sell. There's a 49 million that's in play, 50 million negative, 45 million that's negative. So I'm not convinced yet. See, I don't look for them to go high and then go low. No, that's not the way. I look for a specific pattern in the candle. It has to be my pattern of trade. If not, then I don't have a trade. Now, when the point of control was up here, I was more than happy. I said, ooh, this could be interesting. But now that it came down here, I need this body to come and settle below this. So I'm not desperate to jump in on this trade. It's interesting. It is. And so if I take this trade, then I have to know that I'm taking risk on. What's my risk? That it could come up against me 15 ticks. Do I really want to take a trade where I'm not sure? The answer is no. Never take a trade unless you're sure. You have to be sure 100%. If not, you don't have a trade. Now, this is important because it is telling us one thing, that we have volume divergence setting up. If, okay, now this is also important. This concept and this you cannot have price action going one way and volume divergence the other. Someone is lying. Wait and see who the liar is. They're going to tell you. Believe me when I tell you. You know, what we show you is something so simplistic. There's nothing complicated about it. I mean, it either makes sense or it doesn't. These guys are trading strictly off of math. That's it. It's nothing more, nothing less. See this candle right here, look at how much volume they've shoved into this thing. Now, I can actually feel comfortable shorting it here and say I'm not going to risk more than 10 ticks. Why? Because they opened, number one, very close to where this one closed. Number two, the points of control aren't up here. They're actually below, in the middle of this previous wick. And we have volume divergence. So if this candle, this one settled with bullish volume, but less than the previous one, that is divergence. If this settles with in the negative, the way it is right now, look at how negative that puppy is. Oh, slap someone. Put on some coffee and just slap yourself. Pa, 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 pa. Wake up, wake up, wake up. It's time to get up. And see, you got to wake up. You got to see. What I'm going to show you is how to see it, how to feel it, how to enjoy it. When you see it, when you feel it, and you understand it, they can't take it away from you. Then it's just a matter of really just, you know, how can I say this? Embracing it and going with the flow. So, are there any questions? Really no questions? My God, you guys are disappointing. I'm expecting all of you to jump at this thing and say, I have a question, and no questions. Now, what am I expecting this to go? Here, to this moving average, 17,650. Where would that put me at? 25 points from my entry. And if it breaks below that, where am I going next? Good question. Let us outline that for you. Where's the next pivot? I see a pivot down here, 17,623. So if I'm right, that's a 50-point drop. Wow. 50 points. What is their mean? The mean they're using is actually the 100 moving average, not the 200. That's right, we can go to Disneyland. See, John loves to go to Disneyland. We're going to have to go together, but they're going to have to put us in a wheelchair. And right us around, ain't that right, John? Because my knees can only give so much walking. Even though I do walk 2 miles a day. That's all my body can give me. Yes, I have the 100 EMA on all time frames. But that doesn't mean they're going to use that specifically. It could be one of the three. So you got to know which one of the three they're going to use. Now this trade just hit right now before the news. Holy moly. Before the news. But again, we have volume divergence. See how important this indicator is? Significantly important. Now see, when they start to do this nonsense, then if they don't follow through, and again, I was expecting them to come here, but if I don't see a follow through in the trade, then at that point, it's considered a scalp, and they got their head scalped. And so what I'll do is I'll just simply just take what's on the table, and I won't think twice about it. That's win number 2. Not win number 1, win number 2. And so again, let them tell you the truth, let them tell you the lie. They will show you that they are liars or that they are buyers. And they're either going to buy or sell. So now we basically can see that even though we don't have power dots here, if they set it up the right way, we will find an opportunity. And if there's volume divergence, it will be there. Small little tricks of the trade. Many were saying, well, that looks a little complicated. Well, it's not. Actually, volume showed up here, and then it started to settle lower. See how it settled lower, and then this one just went pop to the bottom. Yeah, the volume showed up to the upside, but then it started to diminish to the upside, as you can see here. It settled lower, still was bullish, and then this one came in and boom, brought it all the way down. So it was a 25-point trade. You only need 2 of those a day, or in one session. And then at that point, once you master that, I love 50-point trades. I love 100-point trades. No, not necessarily. That is something that I have yet to show you. If you once you point of control, you mean? No, point of interest. No, I didn't, because before this came here, it was up here. Then they changed it, so it didn't settle with a point of control here and the body here. At the beginning, the point of control is here. Then they shifted it. So when I saw that it was here, and then they shifted it, but I saw that the volume was diminishing, I said, oh, they're doing something different. They're changing. Now, if we go to a 7-minute, I can assure you that the 7-minute will clarify it. Let's go to the 7. I mean, we were already in the trade anyway. And they're coming down again. I hate when they do that. They really bug me. So that's why I say sometimes they love to just play with your mind. See here on the 7-minute, what did they do? The body closed higher, but it did not settle negatively. So this candle came down. When this candle came down and settled in the negative, then at that point, that confirmed short. And so we got in here at 1670, and it came all the way down to 17,650. Now it's trading at 17,644, which now would have been a much better trade for us. So the 7-minute is the one that gave it. The 10-minute, I saw it, but I didn't want to change to the 7-minute real quickly because I knew that if I did, it would be detrimental to me. Why? Because of the time that the volume indicator takes to identify. So let's see if we have something else that's interesting. Swiss yens, Aussie Swiss, holy moly. I mean, these are pairs that normally we wouldn't even touch with a 10-foot pole. The Swiss CAD, Euro CAD, See, so here, for instance, we're seeing that there's a lot of motion taking place here. Someone's going to get imbalanced. Someone's going to be taken out of balance. Just don't know who yet, but someone's going to be taken out of balance. So maybe I want to look at the Swiss yen or the Aussie Swiss, which I never ever look at. Let's go look at the Aussie Swiss. Now if you just type it in, look, I hate when they do that. It's despicable. They really get under my skin. So now we have 2 trades for the morning. Not bad. Let's see if we find a third one. And again, I'm not scalping. These are not trades that are scalped. Okay, let's get that out of the way. These are trades that I'm looking for one of them to pop and give me the move that would basically put the icing on the cake and say, yeah, baby, I got you. Now you see this one here, the Aussie is actually going long, and this is the signature move that I like. Why is this the signature move? See, my indicator tells me that there's an imbalance between price action and the point of control. So when this comes out, this tells me, go. And you don't always get it, but sometimes you do. See, like right here, you had 2 of them. Right here, it said go long. They went long. Then this one said go short. This one said go short. And what they do, they went short. Then here, didn't really have a signal here. Went long anyway. And they've been trading within the mean. They're not doing anything different. This one bounced off of the trend stop. There were no power dots here. They just went away from it, came back down. It's like they're trying to retest it. They're undecided. Who's gaining strength and who's gaining weakness? Well, they say that the Swiss is weakening against the Aussie. That's what, is it? Yeah, that's what it seems like. Even though now, that may be over. And so I want to see when that happens. See how they're using the mean to trade? I mean, if I would have gone long, I would have gotten spanked. Look at that trade. I mean, they just whipped and beat someone into submission in a matter of seconds. So again, look for the trade that is on your terms, not theirs. So I'm going to leave you with this trade for a minute. I'll be right back. Okay, I'm back. All right, so let's look at this. What did they do? See, that's why I wanted to wait. I wanted to see how they're using the trend dots. They're using them as support levels. So they came down, settled right above it, and now this one is bullish, as you can see here. See, it's trading inside the previous candle, but it has bullish volume. But price action isn't agreeing with it. Now here's another thing. That may be the case, but I'm not comfortable with it. Because see, this candle is bearish, and this is normally the pattern that I look for reversal to the downside. However, I would prefer if this candle starts to go negative too, but it doesn't. And so when I see that they don't, and I see that they're using the trend dots as a support level, then I'm not interested. Now, if this candle would have closed below the trend dots, one second. If this candle would have closed below the trend dots, then at that point, I would be, I'd be interested to see how it's starting to come down. That's usually the trigger that I look for, but I'm not sold on it yet. That's the difference. That is the difference. So now, see, it still has bullish volume. Look at that. A bearish candle with bullish volume. Am I going to jump in on that? No way, Jose. No, I trade futures as well. That's why we traded the mini Dow. I just like to show people, you know, in that we can look at crude. You know, right now, for instance, if I'm not seeing anything that I don't like, you know, I'll go look at something else. And in this case, I probably will look at crude. But the same principles apply to both markets, to trading, foreign exchange, and futures. What I'd like to show you, the reason I do this is to show you that my software works on, if you want to trade futures, forex, stocks. You can trade all three asset classes. If you want to trade binaries, you can use my software to identify those trades. There's a lot of people out there trading binaries right now. At the end of the day, like I said, it comes down to one thing: understanding what they're doing. The same principles apply if you understand the rules of conduct, the rules of the game. Now we're in crude. Let's see what crude has to say. Why would I have gone short here? This is my pattern right here. I'm late, but it's coming down. I have volume divergence. See? And everything has been negative ever since, but I'm late. And if I'm late, I can't take a trade. It goes against my judgment. I'm trying to design a strategy for it right now that I think that people could use, but right now, not really. See, this was literally a few minutes ago. No, an hour ago, actually. And this is reacting off of news. Let's take a look. You know, again, I'm late. I hate being late. It bugs me. Let's look at the calendar. Bunch of maroons. So consumer sentiment came in higher than expected. Business inventories came in less than expected, as of course that it is expected. Inflation expectations came in less than expected. Okay, not bad. So now we know where they stand. So the news is over. Now we can get back to business. So let's see how. Oh, look at what they're doing here. This is a no-no. So what happens when they do such a thing? I'm looking for the volume to settle up, bullish. If I don't see it, then I don't trade it. But sometimes I wait for the candle to close. And they won't do it on this candle. Believe me, they're not that dumb. So you just got to wait. It's a matter of being patient. and everything will play. But see, this was your trigger right here. It wasn't this candle, it was this candle. And damn, that was a damn good trade. Went from 46.32 to 45.89. I can kick myself. What are they doing? Trading away from the mean. Now, they've been here before. The question is, will they go below? That's the next question. Can't really say yet. So again, I'm not interested because I missed the trade. I don't have a choice but to walk away. Let's look and see if there is something else. You see the New Zealand CAD's in play because of oil right now. Get that thing just go. Man, how could we have missed that trade? That is what it is. Let's take a look at gold real quickly. And again, don't judge this for being slow. Believe me. I'm just using one chart to show you. Normally, when I trade, I've got 4 charts up, minimum. And so, you know, when I'm using one chart, of course, but if I've got 4 charts up, believe me, this is nothing. Okay, gold. I love gold. Gold and me are friends. We've been buddies for a long time. I got one client that religiously trades gold. He beats and whips them to shreds. My God, this kid is just a bloody menace. So see, this is bullish, so we have volume divergence up. So someone's lying. Who's, oh no, that's not the one I wanted. I wanted this one. Who's lying? We don't know yet, but we're going to find out right now, aren't we? So is price action lying or is volume lying? Good question. See the trend dots right here? For all I know, they could be using this next trend dot to go down. Not sold on a long, not sold on a short. Waiting, waiting. This candle tells me long. So if I know that it's very close to this one, and I know it's very close to this one, then I'm only risking 10 ticks. Can I live with that decision? The answer is yes. If I'm only exposing 10 ticks, I can, except my only problem is that they're trading right below the trend dot. So I would need them to really, really just jump. And they're about to right now. That's despicable. You took my entry away, you bunch of jerks. Look at that, they jumped. Ah, I missed it. See, if I don't get in on my terms, then I can't take the trade. That's just the bottom line. It has to be on my terms. And see, they did it here. So it's not the first time, but this is just more extreme. Now, I would have preferred if the point of control here was here, to be quite honest with you. But, you know, it's a judgment call. And eventually you make these judgment calls. You know, if we would have gotten in here at 66.5, look where we'd be at. You know, we'd be up $1 right now in gold. Or now, I don't feel comfortable getting in. I'm late. I'm late. Any questions? So you can trade gold, you can trade crude, you can trade silver, you can trade the E-minis, you can trade the DAX. The DAX is just a bomb. Trading the DAX during the European session, if you're in Europe, oh my Lord, Lord have mercy. That one is so transparent, it's not even funny. And this thing's just going to continue to go. Man, it just really, really upsets the heart. It really does. That we missed that entry. But sometimes it happens. Let's take a look real quickly at the Dow, see what it did. Look at that thing. It's just going to go. Man, why didn't I jump in on that? I was talking. I should have just hit the trigger. Yeah, it is what it is. That would have been our third trade. Let's go look at the Dow and see what damage they did there. It came down. Oh. Came down even further than where we were at. So we weren't wrong about the trade. I just didn't want to stay in it. See? Told you. Remember, I got in up here at 17,670. Look where it came down. All the way down. Oh. Now this is interesting. This settled with a bullish outcome. You know what? I'm going to buy it. Do you know why? Because this candle is bearish, but it's settled bullish. Let me show you. And I'll explain why I took it long. Oh my God. I may pick up a few points, not a lot, but to me it looked like it was a decent decision. But again, I'm not willing to risk more than 10 ticks. See, look at that. Bullish volume. A bearish candle of that nature with bullish volume? Not in my life, you don't. See, everyone else that's looking at price action would say, let's go short. And I'm like, no, wait for it. You know, when they do a long candle like this and it closes away from the point of control and it's bullish the way they did here and very little volume, I look at it and say, what did you do? No, you did not do such a thing. You did not just give a trade away, did you? So let's see if trade number 3 gives us a little bit more. I guess it will. Look at that. Maybe we have the magic carpet for trading. I don't know. What do you think? What's the volume say? Bullish. Bullish, bullish, bullish. How far? Don't know yet. You know, I know that this is a mistake on their end, but not, because they tried to induce people to go short, where this is telling you no. Now, would this be considered a scalp trade based on this? Yeah, it would, you know, but now I want to hold on and see if they're really going to scalp their heads, because that's all that matters to me, is to know that they're the ones that are going to lose and that I'm going to win. Nothing else matters at this point except that. But because of all the nonsense, you know, at this point, do I really want to stay and play knowing that they may go against me? Not really. See how it went against me real quickly, how it held? That's the difference. When they start trading, start using the trend dots, you have to be careful. But this was a good signal, you know. I waited too long. Maybe now I should reverse. I don't feel comfortable reversing. Here, I think they're fighting. See, look at all the volume. 596 on the buy, 533 on the sell, 536 on the sell, still bullish. 614 on 615 on the buy, 618 on the buy, 624, 629, 648. Oh man, they're fighting. It's a fight to the death. 560, 563, 566 on the sell, 569, 648, 572. They're holding. Still the bulls are in play. See, when I see this type of fight after something like this, you know, sort of makes me wonder, do I really want to stay in this fight? Or do I want to wait for them to just, you know, finish up? Sometimes it just doesn't make sense if you're in a trade because they're reacting too fast to it. And sometimes you just want to wait for it. It all depends. Your tolerance is your tolerance. My tolerance is my tolerance. The volume is clearly stating run up, but it's not doing a whole lot. So when I don't see it react immediately to my desires, then I take what's on the table and say, I'll wait. I'm not in a hurry. That was number 3. Still with a positive outcome. Now, why did I get out? Because they're trading around the mean and they can use a trend dot as a resistance level and then boom, come down. So that's why. But this told me, hey, you know, they're gonna do something foolish. Now, it's better when it's a smaller candle and not a big candle. That's when it's better. But look at all the volume they've shoved into this thing. I mean, this is high frequency. This one had nothing. This, they shoved the kitchen sink at it and bought another one and broke it on top of someone's head. See? Now it's going long. We probably would have picked up 10 ticks on this trade. So that was trade number 3. Again, not what I was, you know, looking for, but proving a point. Let's see if there's something. You know, sometimes the US yen will react late. Let's take a look at that US yen. And sometimes during a session, you know, I may find 5 trades. But I'm really looking for that one trade. That one, the one and only. The one and only that says, you're the one. You're the one. You got to fall in love with your trade, because if not, then you don't have a trade. See, here for instance, I'm not in love, but I'm thinking about it. I would have been really in love with this one because it was bullish and then settled with negative volume, and they just kicked someone right between the eyes. Here, not really. You know, I got no love for it. It looks good, but I'm not sold on it because at any moment they could reverse. Why? Because their agenda is to come down. And so what happens is that once they go down 20, 30 pips, they will range. They will flatline. They will pull liquidity, and then they'll go short. And so I actually feel here more comfortable shorting it than I do actually going long. What would my risk be? I'll risk 6, 5 pips, nothing more. Why? Because they're trading below the trend dots. See, I'm already positive 1 pip on this thing. Their agenda is to go short. This is just a small retracement. I'm up 3 pips. But I understand what they're doing, and that is what I want you to understand. I want you to envision what I envision, and I can show you and teach you to envision that. Yes, it works on the 1 hour. Oh yeah, are you kidding? If you can find this, if you can find this same pattern in the higher time frames, my God, man, you've got trades to kill. I'm just showing you this, in the smaller time frames, but I teach people to look at the higher time frames and map it out on a 720, on a 12 hour, on a 8 hour, on a 4 hour, on a 2 hour. And believe me, those trades are just outstanding because those trades just run, but you got to prove a point one way, and in this case, this is the one way that I'm demonstrating. If I can show it to you that it works in the smaller time frames, then make no mistake about it, it will just run amok in the higher time frames. It's all a matter of putting in the time to study. I will show you what you need to study. I will teach you what you need to look at. Trading is exciting when you win, but it's depressing when you lose. And when you lose, you want nothing to do with trading because you're afraid. See, the one thing that I teach you to do with this system is to remove fear and doubt from your decision process. Fear and doubt can kill your mind and your trade. I don't fear the trade because I look forward to the trade, because I look to understand what they're doing. When I understand what their execution and their play and their protocol and the rules of conduct are, then at that point I say, I win, you lose. It's on my terms, not yours. And if it's not on my terms, then I don't want to play. See, I took 1 pip out of it. That's number 4. Again, why didn't I stay? I don't feel comfortable with it anymore. And it's going to come down. It really is. They're not going to hold it. But the whole point of this is for you to understand that you can win. You can beat them at this game. This game is not impossible. Look, let's look at the euro real quickly, and we'll go to the higher time frames as an example. See, this is a type of system that is cutting edge from every aspect because it allows you to see. See, you could never see volume in Forex, ever. We've synthetically created it so that you can actually envision it, understand it, and trade it. In futures, you can see volume left and right all day long, all day long. Okay, so let's take a look at this. Let me remove the volume indicator because I'm not trading I'm not looking for a trade now. I'm just looking to show you. Let us remove the price identifier, both. Let's remove both of them so that we can move quickly. Okay. So now, normally, I will map out my trades from the very top. I'm looking for power dots. Why don't I have power dots here? Because there are none. I'll go down to the 720. Here I have power dots. So what do I do here? I map this one out. Let me add more days because it's obvious that the data series requires more days for these lines to populate. How many do I have? 30. I'll go to, let's say 75. 75 days of data. There. These are levels that have been mapped out in higher time frames. Okay, the solids means they are daily or weekly. This is a weekly level. Weekly level. See how this identified here to go short? If we added the price identifier, we would be looking for that same pattern. If we see it, then we know. But more importantly is that if you have power dots in the higher time frame, then you're looking in the smaller time frame to see how they're reacting to it. Because if they're forming around it, then you have a trade to the downside, not the upside. Now, and usually they'll go from level to level to level and on. You know, they do not play games. They really mean business. So here, for instance, you know, on the 720, I have this level. It's a mid-range level. Did they use it as such? Did they use it as a support level? No, it was a mid-range level. This level didn't mean much as this level did and this one. What did they announce? For 5 days, they said volume, liquidity, and momentum buildup is coming in. Watch for it. It played, but it wasn't the trade. That wasn't the trade. See here, now I'd say, on the 600 it looks a little clearer. Now maybe I want to put the price identifier. I want to see, what are they showing? Why are they showing me that? Again, you got to know what you're looking for. If you don't know what you're looking for, you can't trade. So what I teach people is you got to map out those levels in the higher time frames because they are your guide. And once you map them out, then you can go into the lower time frames and identify your entries. They can't win because they are in it. Their exposure is too much and they have to balance risk, which is what I teach you to understand. That their robots are programmed to manage risk, not to trade on the offensive. See? So here, for instance, what am I looking at? Let's pull this up. Right under the trend stop, the minute they closed below this weekly level, I'm all over that. But I'm looking at it now in the smaller time frames. So let's say I put a line here just for, just to understand what happened here because they use this level pretty religiously here, okay? Let's leave that line there and let's work our way down now. And you will see that power dots will form 480. It's the price identifier. Bear with it. Now remove it real quickly as soon as it populates again. Excuse me. Give it a minute, give it a minute, give it a minute, give it a minute. But you can trade futures, you can trade Forex, you can trade stocks. Now I'll tell you one thing, on futures this thing is explosive because there's no way to hide the volume in futures. Everyone gets the same thing. Okay, so now here, look at this candle here. See this candle? Let me remove this. Let's go here. What is this? What did this candle tell you? This candle told you that they settled right below the point of control. Isn't that what we look for? Look at here. See how they settled below and then they went short? But this is a 480. This is an 8-hour candle. When they do it in the higher time frames, they are dead. There's no question. I mean, it's a beatdown of severity that they're going to get. This thing came down from 114.25 all the way down to 113. Oh my, 145 pips. Are you kidding me? How long did it take them? A day and a half. They're still not done. They got to come all the way down here to 1234. but we still don't have power dots, but we're going to go look for them right now. We're just going to remove this one so that we can move fast. Okay, so now let's continue. 300. Power dots in the 300 minute. What does that mean to you? That this trade was legit. On the higher time frame, they told you that there was volume, liquidity, and momentum buildup, and that it was going to crash right off the weekly. 240. Again, power dots. Now we have multiple time frame confirmation in the higher time frames. What was that telling you? Don't go long. It's going to go short. Look for a short. Let's continue. 180. 180 power dots, where we put the line originally. So again, multiple time frame confirmation. What more do you want? 3 multiple time frames on top of a weekly. This is the 120, nothing. Let's look at the 90, nothing. Let's look at the 60. And let's bring this back. Nothing. We knew they traded to get away from the mean. They were going to come right back and break it. It was only natural. You had 3 levels of confirmation, 4 a weekly, and then these 3 higher time frames. Come on, what more are you asking for? I mean, seriously, there's only so much that, this system can only do so much for you. I mean, it makes you think. It makes you react to information. But in the smaller time frames, see when they traded below the 180 here, and they held, and then they came back and retested, this was your re-entry to just shove it down their throats and show no remorse. So this is a 20-minute. Again, I'm going to show you to look at time frames that you're not accustomed to. This one here was telling you that there was volume momentum, but it was inverted. So how do you look at it? You look at it in that perspective. You analyze it and say, hey, wait a minute, I have got higher time frames telling me that this thing's going to go short. This thing doesn't make sense, so maybe I need to look for that pattern, but I can't see that pattern without the volume price identifier. Whoops. So maybe if you had everything that I have, you'd be able to say, oh my God, I can see clear now. There's a song out there, I can see clear now, the rain is gone. So you have to sing a little bit too. You got to enjoy yourself when you're trading. More than likely, it's not about enjoying, it's about understanding. Comprehension of the rules of conduct are very serious when it comes to trading. And I know that a lot of you have spent a lot of money elsewhere and it hasn't worked for you. Why? Because they didn't have the right information. And that's unfortunate. I'm not cheap. I'm expensive. Don't apologize for it, because what I'm going to show you is how to really trade the market, how to win. That's what this is about. So what would I have been looking for here that would have said on a 15-minute, hey, maybe I need to be looking for a short? Let's look at that. It's important. You need to understand it. You need to come to terms with it, okay? Because if it's not on the 15, it's on the 10-minute, but we're looking for a specific pattern of information. Here, see, this candle told you, after this one, told you short. This one told you short, but then they came back and they retested. And so here, this one here, see this candle here, said short. Now, if you verify this with the volume indicator, you'll see that this had bearish volume. And all they were doing is using the trend stop as a resistance level before they basically just came down and whipped everyone. That was it. I mean, look, there's, like I said, you have to come to terms with what you're looking for. This system is going to guide you in the right direction. This candle told you short, but they used the power dots as a resistance level. This happens. They will usually go against you 10, 15 pips. This was a 10 pip move, 114 to 114.12. And I teach people to see it. And if I have power dots below a weekly level, I'm waiting for them to go short and right by the mean. Are you kidding? I'm going to throw the kitchen sink at them and not think twice about it. So now if we look at a 12-minute, will a 12-minute make a difference? Yes, it will. Again, you're looking to confirm. So you can't say that, oh, well, this is in hindsight. No, we just traded live 4 trades live. Live. They weren't scalps. I don't scalp. We don't scalp. It's not part of our strategy. So again, you have to come to terms with what you want, how you want it, and we will design a strategy that makes sense. Richard, we will go over it. So here, for instance, look, this was this morning, today, okay? It started at 2 a.m. Pacific, which is 5 a.m. Eastern. The signal was here, okay? This told you go short. This told you go short. Look at all the time. 3 hours of notification around the mean. Are you kidding me? And there was a 120-minute level as well that said short. This was your trade. Now, if we go back here where they originally came from, you know, again, what are we looking for? This pattern. This bad boy right here is the one that said, and this one. See, so it's a matter of following a system. And sometimes we deviate from it. And when we deviate from it, we lose. Why? Because we choose to do what should not be done. Here they did it very clearly. And then, of course, they came here. Did they do it here? Wasn't clear here, but there were power dots. They held. You know, this was the news. I would not have really jumped on this one quite yet. I wouldn't have been convinced. I would have looked for more clarity and more verification. I saw it here. Again, I'm looking for my terms. If my terms don't appear, then I got no business trading. It's on my terms. And if it's not on my terms, I'm not trading. We went over that today. It's still going down. So this has come down from 113.54 down to 112.96. That's 50 pips that you could have picked up. 50 pips. Since 2 a.m. my time, which is 5 a.m. Eastern time. So Peter, I hope I've answered your question. And so that's all that I have to share with you today. It is Friday. I want to thank you very much for joining us here at Phoenix Trading Strategies. I know some of you will have some questions, so I'm going to do the following for you right now. I'm going to put my email, ricardo@phoenixtradingstrategies.com. Let me put that correctly so that you can contact me. I know you will. If you have any questions, you want to connect with me on Skype, my Skype is ricardo@pfg. And my telephone here in the US, 818-431-1357. There you go. That is my contact information. And I want to thank you very much for joining us today here at Phoenix Trading Strategies. It has been a pleasure having you here. I hope to see you Monday morning, same time, 9 a.m. Eastern time. We will continue. I know that many of you are thinking very hard about this system and whether it is the right system for you. I can assure you that the information that we provide is cutting edge. No one out there has what we have. It's unmatched. The results that you will have will be unmatched. And that's all we can ask and say. Thank you so much. Have a great weekend, and I will see you guys Monday morning. Bye-bye now. Rich, send me an email. We'll talk.